Look, thanks for joining us tonight. We're here talking about June 2022, last month compared to a year ago, and indeed the recent trends. And man, it's bloody interesting. It continues to be interesting out there. I mean, Wellington City values down 19% since the peak in October. Now, that's a big, if we say roughly 20%, if it goes from 100 down to 80, when it turns around and goes back up to 100 again, that's a 25% increase. And it takes quite a bit for a market to go up 25%, assuming you haven't just had a COVID lockdown and things go totally crazy. But anyway, point being that 19%, it's quite a big drop, about twice what we saw in the GFC. And that's in Wellington City. Wellington region is slightly less than 19, but we'll get into that. And more supply than we've had since 2015. For the month of June anyway, and of course June being a winter month, or the first sort of winter month really, and so typically we see fewer listings coming on and things slow down a bit in winter. So we'll see soon that our supply volumes on Trade Me have actually reduced a little bit. That doesn't mean the market's tightening. It's more just a sign of the winter months, I think. So my message for the last couple of months has been, if you're a buyer out there, I would encourage you to be bold and go for it. And I'm actually a buyer myself at the moment. We've sold our house, buying another home. So just to get in amongst it, these are the best buying conditions we've seen for a very long time. So into the detail, here we have median sale price. Now, many of you will know that I don't really like median sale price, so we certainly take month by month with a grain of salt. The trend is still of interest, just not the most instructive data, if you like, or metric for underlying values. But let's look at it anyway. So June 2022, 848,000 versus 885,000 a year ago, so that's down 4%. But you can see here, if you look at the actual shape of the graphs, the blue lines show the monthly results, the bar chart, you'll see there that result is significantly down compared to anything over the last sort of 8 months or so. Is that just a one-off? Maybe, because it does bounce around a little bbit from month to month, and it is also reflective of the mix of properties being sold, not necessarily just of underlying values. But yeah, you can see there that the last time we were lower than this, well, we were a tiny bit lower back there in September 2021. So just under a year ago. But other than that, the last time we were down at below this sort of level was way back before lockdown. So this is quite a significant reduction indeed, and you can see there that the red line, which is the 6-month moving average, yeah, certainly turned a corner, and that's heading downwards. But as I say, not the best or the most insightful metric to use. I prefer to use the Real Estate Institute House Price Index, which is a stratified mean, technically speaking. And basically what it does is it takes out the influence of the mix of values of properties sold, and it tries to really give a better sense of not what are the prices that are being sold at, but what are the values of underlying of properties, regardless of their sort of value level, I suppose. And what this is showing is still pretty more stark results, really. This is what we have seen quite consistently over the last sort of 6 months or so. Over the last month, down nearly 4% in the month of June alone, down over 9% in the last 3 months, and 12% lower than 12 months ago. Now, of course, 12 months ago, values were still rising, but only very slowly, to be fair. So from there, it went up a little bit, then it came down, and it's gone down further by 12% since 12 months ago. That, of course, is Wellington region. You can see there that includes Poruru, Upper Hutt, Lower Hutt, Wellington City. So on these measurements, at least, they don't include Kapiti or the Wairarapa. In some sets of data that you look at, the Wellington region does include that, but not these ones. And so if we look at the Wellington City results, gosh, we're even more extreme than that. So down 18% compared to a year ago, down 12.5% just in 3 months, and nearly 6% just in June alone. So now, again, this is month to month. Even on this basis, it can bounce around a little bit. It's not as variable as the median. But when you go down to these territorial authorities, it's a smaller sample size, so you do get a bit more variability. So it's perhaps more instructive when you're wanting to really understand the overall trend, to look at the Wellington region results. And if you are going to look at the territorial authorities, at least look at the 3-month result, not the 1-month result. Anyway, quite big drops nonetheless. And if we look at this graph here, you can see that the blue line is the monthly result. So way back in February 2021, we were really coming off the absolute peak of the rate of growth at that point. Sorry, I'm just going to check to see, make sure no one else is waiting. No, yes, there are people waiting. Here we go. So yeah, we were coming off the peak results there. But since March of last year, we could see actually that the rate of growth had dropped right back down to sort of 1%, 2% a month. And it really didn't increase from there since. And indeed, since late last year or November, for the first time, we were in negative territory. We did bounce up again back in February this year, but for the most part, it's been down in negative. And the last four sets of results have been negative by not just 1% or 0.5%, but several percent per month. The orange graph shows you the 3-month results. So we're seeing, we've gone from 12% growth in 3 months to February last year, down to sort of approaching minus 10% growth or 10% contraction over 3 months, over the last couple of months. So yeah, quite significant. Down 16% since the peak in October in the Wellington region, and down 19% in Wellington City. And last month I mentioned and showed some graphs, and I haven't got the graphs this month, but I would mention it again, and that is that Tony Alexander does some excellent analysis looking at the different territorial authorities and sort of saying, what are the underlying values of properties in those locations compared to New Zealand overall, and how does that sit when compared to its long-term trend? And what we're seeing from that analysis is that Wellington City, which has fallen, I think I'm right in saying that the results for Wellington City is the biggest contraction that we've seen for any territorial authority in the country. The relative value of properties in Wellington City is bang on where it normally sits compared to the nation overall. So that suggests that it's not as precariously placed, if you like. It's a bit more defensive than if the values were significantly higher, the long-term norm, when compared to New Zealand on average. And that is the case for the other authorities or the other locations in the sort of Greater Wellington or Lower North Island. So, for example, the Hutt Valleys, Porirua, Kapiti, and the Wairarapa, they're all still sitting quite a bit over, like 10, 20, 30% higher than their long-term trend when compared to average values in New Zealand. That doesn't necessarily mean they're going to come down, but at least it suggests that they are more susceptible to more price corrections than the city. So just in case some of you were getting overly depressed about Wellington City being such a bad performer, that analysis would suggest that now Wellington City is more defensively placed than some other locations, and might not be as susceptible to such bigger drops going forward compared to other places. Obviously, there's no guarantee, and time will tell. Anyway, moving on, number of new listings. So we have seen quite an uptick in new listing activity when compared to the same time a year ago and 2 years ago. So 675 new listings in June. Now, if you see again, you look at the blue bar chart, you'll see that's quite low compared to a few months ago, but that's just the seasonal effect. When compared to the same time last year and the year before, it's quite a lot for winter. So 675 versus 547 a year ago and 536 2 years ago. So those two results obviously quite similar. 536, 547. That's quite consistent. Big jump up to 675. So it's a growth of 23% from a year ago, 26% from 2 years ago. And again, you see that in the red line, which shows the moving average. So we were coming down a little bit, and then we bounced back up again this month. And it's quite unusual for us to be on average around that 800 mark. For the most part, we do tend to go between 600 and 800 new listings for the month. Very unusual for it to be less than that. Very unusual for it to be more than that. We have seen more than that on occasion here in the last few months, and way back there in sort of early 2016. This was when the market, the boom just got going in early 2016. So yeah, interesting to watch that red line to see if indeed, as some people have been predicting, that we're going to see a rush of vendors bringing stock to the market. We haven't yet seen a massive rush. Yes, it is higher than a year ago and 2 years ago for June, but overall, while we have seen increasing levels of stock coming to the market, it hasn't been you know, a huge exodus of vendors trying to get out of the market. But nonetheless, increase in new listings volumes compared to a year ago. This is more of the big headline story. Excuse me, I'll just let someone in. And this is the number of sales taking place. And this is really big drops. So that kind of indicates what's happening on the buyer side, of course. If buyers are really eager to transact, then the number of sales taking place will be higher or going up, and really only then gets constrained by the amount of stock on the market. Obviously, you can't buy more than what's available. But in this instance, we're seeing volumes of sales falling away, and falling away really quite significantly. So just like we typically see between 600 and 800 new listings come to the market, we tend to see typically between 600 and 800 properties sell. And we have over the last sort of 3 or 4 months seen number of properties on average over the previous 6 months dropping right down to below that 600 mark. And the only time since I've started capturing this data that we've seen a 6-month moving average below 600 was when the market was shut, when we were in lockdown. And so we're now significantly below that level. We're under 500. First time I've ever seen that since I started capturing this data in early 2015. So this is really quite dramatic. And gosh, can it fall further? I would suspect that probably we will see these numbers start to go up a bit as more stock comes to the market in spring. Having said that, there is no shortage of stock at the moment, so that's not really what's constraining these numbers. What's constraining the volumes will be, I suggest, 2 things. Number one, there are buyers out there who want to buy and they can't get the finance because of the tighter rules. Although, from talking to brokers and so on around, I understand that is relaxing, and there are more people getting finance now, and things are loosening up a bit. Not the rules necessarily loosening up a lot, but at least the buyers are now qualifying for finance. They can get their arms around the new rules, perhaps. But the other thing is, of course, there are a lot of buyers who will be just sitting on the sidelines and cautious, nervous, scared. You know, perhaps scared by now, and then the property falls in value by 50 grand, whatever, in the next few months, or they might find a better buy later. Certainly there is less pressure on buyers, that's for sure. But you know, there are a number of people who are sitting on the sidelines, either on purpose as a strategy or just out of uncertainty and nervousness, worrying about how far things will fall. Now, for those of you who are in that situation, I would encourage you to not to do that, to come off the sidelines, get into the market and actually transact. What you should use this time for is to make sure you're getting a property that meets more of your requirements than you would otherwise have been able to get because of market competition. As I say, I'm in the market myself, and I'm certainly not going to hesitate to buy something. Obviously, like every buyer, I want to get the best property for the best price, but I'm certainly not sitting on the sidelines waiting for some magical bottom of the market, because no one can pick that stuff. Anyway, yeah, moving along. As I say, if you've got any questions or want to have a chat about anything, then just fire away. Otherwise, I'll keep going. How long is it taking to sell? Again, you see that red line. This is pretty dramatic. I mean, you know, it's like the big Nike tick there, straight upwards. 50 days in June on average take to sell to property. Now, if you can understand, you've got your property on the market, and on average, it's taken 50 days to sell. A lot of properties aren't selling, and that's obviously even worse for the vendors. But even as a vendor, if you have to wait for 50 days to sell your property, it's not 50 working days, of course, that's 50 days, but that's nearly 2 months. That 2 months does feel like a long time. And if you're longer than that, then that's wow, that feels like a very long time to have your property on the market and taking viewings and so on. So certainly this is all great news for buyers out there, you know, to take advantage of these conditions, as I keep saying. So yeah, 50 days compared to 31 days in June last year, 34 days June the year before that. So quite consistent, June 2020 and 21, big increase, 61% more than a year ago, 47% more than 2 years ago. And again, you can see for the last sort of 6 months, the lowest result we've seen there is about 42, 43 days. And back in May, we saw 55 days, which was remarkable. The same duration of time that it took to sell a property while we were in lockdown or just coming out of lockdown. So that's when the market was absolutely shut, but no one could really transact. So this is certainly slow compared to what's normal in Wellington, as you can see from that hockey stick there. Inventory, this is how many weeks worth of supply have we got on the market. So again, we're seeing high levels of inventory. We've seen 21, then 20, then 20 weeks worth in the last 3 months. So 20 weeks in June compared to 5. So 4 times the amount of inventory compared to a year ago, and nearly twice compared to 2 years ago. Of course, June 2020, we were just coming out of lockdown, so a lot of vendors were still a bit hesitant to bring the property to the market. So slightly unusual time there, perhaps, and buyers also out of the market. So anyway, it's just a bit of a funny time in the market then. But certainly a huge increase in the amount of inventory we've seen on the market, as you can see. You know, the graph paints that picture very, very clearly indeed. And I think the long-term average inventory for Wellington is 15 weeks. So by that measure, if it's more than 15 weeks worth of supply, you would call that technically a buyer's market. If it's less than 15 weeks worth of supply, then you would technically call it a seller's market. Number of Trade Me listings. This is a very consistent theme we've seen in the last 3 to 6 months or so. 2,645 as of a couple of days ago, compared to 1,053 July 21 and 1,366 July 2020. So 151% more than 12 months ago. Back in June, the measure was 161% more. So it's dramatically more than a year ago now, but not quite as dramatically more as we saw a month and 2 months ago. And again, if you look at that, if you look at the shape of the graph there, you can see the blue bar chart. The last couple of months, you've actually seen volumes of listings on Trade Me reduce. And this is typical. It's what we see generally as we pass through daylight savings and we head towards winter. The number of new listings coming on reduces as a seasonal effect, and as properties continue to sell, not necessarily at the same rate, but generally the amount of buyers in the market doesn't reduce by as much as the amount of new listings coming to the market. So what often happens is in winter months, we do see a bit of the old stock clearing off and the number of listings on Trade Me reduces. At some point it gets to a low seasonally until the spring starts coming back, and we see an increase often, maybe as early as late August, but often in September, if it's an election year and that sort of thing, the spring rush can be delayed even longer than that. But you know, September is normally a good sign, or it might start increasing in August. So yeah, it'll be interesting to see how low that the amount of stock on Trade Me gets before it starts turning the corner and heading back up again. But even though the monthly results are coming down, the 6 monthly average has still been going up, and so that's showing that we're still on average in the last 6 months, we've seen more listings on Trade Me than the 6 month prior. So yeah, tons and tons of stock, still more listings than any other July since 2015. So again, great conditions for buyers, lots of choice out there. So in summary, median prices falling and values falling really quite significantly, 16% down since the peak in the Wellington region and 19% down in Wellington City. New listings up. And in the last few months, if I remember rightly, we've seen new listings up a bit. In June, we saw new listings up quite a bit versus 2020 and 2021. Not as much up as we've seen sales volumes down, but if you get a combination of increasing listings and reducing sales, then overall, seasonal impacts aside, you are going to see listing volumes swelling over time, of course. Yeah, duration, sales volumes down really quite significantly. So sales volumes have fallen about 40%, and that is absolutely massive. To get sales volumes to drop by nearly half, something is going on, that is for sure. Duration to sell has been up compared to 2021, but in the last few months, it has sort of leveled off at around that 50 days. So maybe this is as long as it's going to take. Maybe it's going to head down a little bit. Maybe it's going to go sideways. I suspect it might not get tougher than this. The last 6 months have been pretty tough out there in the market. Inventory remains high at 20 weeks, 4 times what it was a year ago, roughly twice what it was 2 years ago. More trade new listings than any July since 2015. And as I keep saying again and again and again, I keep banging on about it. If you are a buyer, please do not stand on the sidelines. It's unlikely you're going to see better buying conditions than we have in front of us right now. So I would encourage you to get amongst it. Don't look back and say, oh, gee, I wish I should have, I could have, I oughta. So look, that's all I got for you today. Happy to have a discussion now if you've got questions, or if you want to revisit any of that data, or if you want to have a chat about what you're seeing out there. We've got a bit of time now, so by all means, shoot. I will now shut up and let you fire away if you'd like to.
It's just thought I'd mention that, contrary to what other people have been telling me, is that the reduction in property prices seems to be higher in the outer regions than what is in Wellington Central, which is contrary to what you were saying.
Yeah, it's not what the data is saying. Now don't forget, this is the house price index that I'm quoting. Yes. It is not house prices. It is a proxy for values. So I don't know what you're talking about. Anecdotal stories, are you?
Oh well, yes, things that real estate agents have told me that the property values in Wainui's, Upper Huts and places like that, Tawa, are actually dropping more significantly than those in Wellington Central.
Okay, and I mean, whenever someone obviously says this sort of thing, I always ask myself, okay, what's in their interests here?
Oh, totally.
And,
yes.
Yeah, of course, and I know you're an astute guy, so yeah, I don't know, I don't sell in Wainui or Upper Hutt, so
But I totally agree with you that I think it is definitely a buyer's market. And I look at my first property that I actually bought years ago, and I paid $56,000 for it. I got it because the other chap who was chasing it wouldn't pay $1 over $54,000. So, what was significant back in those days, as we look ahead, if I don't say go out and pay anything for any particular thing, don't pay over the odds, etc. there too, but don't forget that property, to my way of thinking, is one area that in fact it will eventually go up.
Yeah. And that's right. I mean, and 54 versus 56,000. So just let's call it 4%.
Yeah.
So now $2,000 is nothing. No. But if you compare it now to let's say an entry level property in Wellington would be $1 million, sure. And 4% of $1 million is 40. So I've seen many people refuse to pay 40. I've seen many people refuse to pay another 10. And that would be equivalent to you refusing to pay another 500.
Yeah, totally.
Back then, right? So as ridiculous as it seems now, I've seen people losing deals over way less money than that.
Yes.
But you're right. It is silly. If the property is right for you, then don't don't lose it over quite a small thing like that. And of course, it does depend though if it's a family home versus an investment. I mean, an investment, it's really just it's a financial decision. Family home is much more emotional. You might look at way more details and aesthetics and you know, how well will this suit my children and whatever else than an investment property, of course. But but the good thing is, look, in the market right now, for every 10 properties that come to the market on deadline day, whether that be tender or a deadline sale or an auction, most properties are still coming to the market with some kind of deadline. Not many are just saying, here's the property, asking price 1,150,000 or whatever. They're still going tender, deadline or auction. Out of 10 campaigns that close, on average, we're seeing 7 of them, 7 out of 10, 70%, close with no offers. So it's unusual for a property to close its campaign and actually have an offer. And the ones that are getting the offers, and of course you are getting then a bunch of properties that get offers later and then sell later, because on average they're taking 50 days. We've just seen that, and a tender on average would last, well, our tenders tend to be either 16 days or 23 days. And so, you know, that's 2.5 versus 3.5 weeks. So, you know, they will sell, a lot of them sell afterwards, and I don't know out of 100 how many are being taken off the market having not sold, but we're seeing 40% fewer sales taking place and more listings coming on. So that would suggest you're actually seeing 40% perhaps of listings that get withdrawn without having sold. That data could support that. So that's dramatic. You know, that's
something you touched on just a moment ago too, which I would totally support. And I still think it's good because there's probably more property available for people to look at. But
well, there's 25 listings on Trade Me now for every 10 that were on a year ago.
Yeah, but to trade up to something in a better area or something rentable, I think it's
that's right. That's right. And or even as an owner occupier, because of course most investors are not active in the market because the interest tax deductibility has wiped them out. The cash flow doesn't work unless you've just got cash, which most people don't. At least not when they're buying something. Most people have to borrow money to buy a house. But the point is, for buyers, you're absolutely right. There's way more choice. There's way more ability to, in a calm and controlled manner, trade out of your house and into another one, whereas before it was just frenetic, and selling your house and buying another one was a really quite a risky process because everything moved so fast. You could easily get caught on the hop, whereas now you can previously you wouldn't even be looked at if you made an offer to buy a house that was subject to the sale of yours. Whereas we're now seeing subject to, exactly. We're now seeing, I reckon, maybe 50% of houses that get put under contract are subject to the sale of another property. Now, often that property is already on the market or it's already under offer or whatever, but it's still, nonetheless, it's conditional on the sale of another house. And you know, 6 months ago, 12 months ago, 2 years ago, no way would that even be looked at, not even a chance.
But, Adam,
you have way more ability to negotiate now as the buyer, that's for sure. Right. Yeah.
Adam, the other thing too, I don't think you've mentioned at this stage, but it'd be very interesting to know how many people, on average, how many people are living in a residence. You know, 20 years ago it was 3.4, and then it dropped down to 2.4, and so on. And I think that is probably having some impact on sales and what have you, getting houses where you're getting significantly more people living in a house. And that will have an impact on the demand for properties and type of properties, etc. there. So,
well, of course, what I have seen some of that, but I can't recall the exact numbers. But I have seen some of that, and of course, what happens when you get more people in a house, that tends to be, on average, that tends to be a sign. Well, it's a sign that you have a constrained housing market, you have insufficient number of houses for the population growth, and so you have to squeeze more people into the same number of houses, relatively speaking. And so it's very interesting, because that is synonymous with what you might call a housing crisis. And there's been a lot of talk about a housing crisis in New Zealand over the last 5 or so years, and I think it's misunderstood, because actually the data I've seen is not showing that we are getting more people per household across New Zealand, except for in Auckland.
Oh, right.
Right. So Auckland, I think it might be something like 2.8. So we've seen something. It's been something like 2.8 persons per household across the country on average, but in Auckland it's moved up to like 3.2.
Yes.
Something like that. And so Auckland, on that basis, that is empirical evidence that Auckland is the only place that has actually had a housing shortage. Everywhere else, there is no shortage. It's just been rising prices. And so, but of course, the other thing is, if you look at building consent data across the whole country has absolutely spiked. We were producing way few too many, not nearly enough houses after the GFC. People got scared. Then you had tradespeople not getting qualified because they could see not many jobs out there, not much construction happening. And then when the demand did increase, there was insufficient capacity, and so that put a slowdown on things and constrained the production of houses. Now we've seen building consents ramp right up, and again, they are way out of whack with what's normal, way more so in Auckland than in other places. And so you've seen, yes, a constraint in the housing supply in Auckland, given by that census data, going from 2.8 to 3.2 or whatever it was. That's the only place in the country where that happened, as far as I could see. But you've now got way more houses in Auckland being produced than typically is the case. And again, Tony Alexander's done some excellent analysis, sort of looking at population growth versus house supply growth. Yes. And I can't recall the numbers, but he has said something like, at this rate of production, the undersupply of housing will get completely eliminated in something like 2 years. And so very, very quickly, we're going to see, you might see actually an oversupply of housing in Auckland, and you might see that 3.2 dropping back down to 3 to 2.8, and possibly go even lower if we do.
A lot of that will do with baby booms. People born between 1945 and 1955, and they represent 20% of the population. And a lot of those are going to be.
A lot of those are going to
be dying.
Rather passing away. Passing away.
Passing away. Of course, that's going to mean that there will possibly be an oversupply in certain areas. Things, but as long as
only if more people die than are born, right? I mean, at the end of the day, it's about the difference between the population growth and the supply of housing. So,
well, I think a lot of it's going to depend on how many people come into the country. How many we're going to bring in.
We're not seeing people coming into the country. We're seeing an exodus, aren't we? And so for that reason, we're seeing the rental market softening too, because mainly the people who are leaving the country tend to be young people that don't have established ties with families and schools and long established careers and that sort of thing. And those young people are going to Australia for cheaper living and better wages and other places. And for adventures and so on, and these young people, of course, they tend to rent, and so we're seeing significant reduction in demand for rentals too. So it's pretty interesting times. Now, I should say that none of this means that it's a bad time to sell, or none of this means you can't sell. Typically, what drives a person to want to sell their property is, and I know "sell" is a 4-letter word for you, Paul, but what typically drives a person to want to sell a property is not financial incentives. It's life changes, big life events. And so again, I would encourage you to, if that's you, then just remember, if you're buying and selling in the same market, it's all relative. In fact, if you are if you are a net investor, then lower prices are in your favor.
Yeah.
If you're a net divestor, then lower prices are against your favor, against you. But again, I've just been sharing with you. I mean, I've recently sold my place, my home, and we actually sold before we engaged an agent. One of my colleagues, of course, and we sold before the property hit the market. That was very fortunate. We were pleased happy to do that in this market. I certainly, in a hot market, would recommend strongly against that. But where buyers are thin on the ground, then I wouldn't discourage that if you can get a buyer who's keen, because the buyer might have gone by the time 6 months goes by, and it'll be a shame to miss that buyer. But anyway, the key to selling right now is, of course, presenting your property really well. When there is so much to choose from, you have to present quality. Everything has to be in good working order. It has to be perfectly spick and span and clean. The garden's tidy, all the rest of it. That stuff is really important. And secondly, you must have your heads out of the clouds. You have to have your feet on the ground. You have to be realistic. Because when the market is dropping, of course, if you hold out for big money and it takes an extra month to sell, you might have just cost yourself another 50 grand. It's best to meet the market swiftly, get the best you can get, but you know you have to be realistic.
Realize that is that that if you buy before you sell, and I understand there are people who are struggling because they bought a property without selling the one that they intended to trade it in on. And,
yep.
I think you've just got to be a little bit careful.
That's very risky now. Now that was a popular strategy while the market was very tight and prices were rising, because the biggest concern was, if I sell my property, then firstly I might not be successful in securing one, and so I end up stuck without a place to live. I have to rent in the interim. And secondly, if I can't get back into the market quickly, with the market rising so much, I might miss out on. I might have to pay another 50 or 100,000, and I might not make the gain in the property quality that I want to, and so that makes it very dangerous. But yes, you're right, and I know of I can think of a couple of situations where people sold their property. When people bought at the peak of the market or thereabouts, and then they did some changes to their place, fixed it up, whatever, and then put their property on the market, and they end up selling for they might have spent 100,000 doing some work to the property, and they end up selling for no more than they would have sold if they'd just sold it back then. So they lost their 100,000 plus all the stress, and the numbers can be even worse than that. On the other side, I've also seen people buy properties in October, November last year, and then go to sell, and they're literally $300,000-$400,000 adrift because of the movements in the market. So when the market changes like this, it certainly can be quite brutal. But if you are buying and if you're selling in the same market, then it's all relative. And as I say, if you are upgrading your house, or if you're a net investor, then the reduction in prices works in your favor. And these slower market conditions, I believe, are more easier to manage and less likely to get your knuckles grazed. But certainly in any market, I would recommend selling first.
I totally agree, Adam. I'm going to have to.
Shoot off. We'll call it a night then. All right, guys. Hey, well, thanks for joining us tonight. Hope that was useful and interesting. If you need any help, you want appraisal or any advice or anything, just sing out. You know where to find me. Happy to chat. Otherwise, take care. Stay dry out there.